Welcome to Marketvus. And folks, for today, we'll be turning our attention to local pharma industries growing amidst regulatory hurdles, and also Nigeria's halal economy presenting a $1.5 billion opportunity. Welcome to Marketvus with News Central and, of course, Nairametrics. I am Perpetua Fasanmi-Peter, standing in for Joanna Mustafa. And I'm not alone. I also have right here with me
Fagbo Frank. Thank you. Thank you, Fasanmi. Let's go into what we have for today. We've got a lot to talk about. Talking about what has been happening across the market. We're seeing what is happening with pharmaceutical firms, the big pharmas. They're trying to make sure that they stay within the domestic market, and tilting into what is happening regarding the halal industry. The government literally saying that they are coming for $1.5 billion of that particular industry. It's a massive market, and the government is saying that, hey, we need to take a chunk of this pie.
Absolutely, you can say that again. Looking at the $1.5 billion market, that's something you definitely want to be a part of. You want to key into it. And I think one of the things we also have to do is to get Nigerians on board, to get to understand what this is really about. Because when you hear halal, some persons associate it with, oh, it's Muslim, it's Islamic, I don't want to be a part of it. But come on, when you talk about ethical investments,
that's right.
That's what we're talking about. You want to be a part of that. Maybe
money has no religion. I always say that.
You can say that again. And of course, talking about the pharma, I mean, when we heard of the exit of some of these big companies, we were thinking, what will happen? Do we have the capacity to step in? But we see that some of these local pharmaceutical companies are actually stepping in, and they are stepping in real big. Well, that's a conversation we'll come to later on the show. We'll take a break now. When we come back, we have more for you on Marketvus. Stay with us, don't go away.
Markets in Europe and Asia advanced on Tuesday as investors awaited the Federal Reserve's much anticipated interest rate decision. Oil prices remained mixed, while the U.S. stock futures saw slight gains, and more so, the U.S. retail sales data expected soon. Would this really be a critical insight into the health of the economy? In the European market, we're seeing that the German's DAX rose 0.5%, closing at 18,704.36 points, while the France CAC 40 gained 0.5% at 7,485.77 points. The London's FTSE 100 surged 0.7%, reaching 8,338.42 points. Meanwhile, in Asia, the Asian part of the world, Tokyo's Nikkei fell by 1%, but the Hong Kong's Hang Seng advanced 1.4%. Markets in the mainland China and South Korea were closed, while Asia's ASX 200 inched up by 0.2%. On Wall Street, the financial capital of the world, Monday saw the Dow Jones rise by 0.6%, setting a new all-time high at 41,622.08 points, while the S&P 500, the largest, most capitalized in the indices in the world, slightly increased to 5,633.09 points. The Nasdaq slid 0.5%. You see what has been happening with Nvidia. Literally, a lot of investors ending up being liquidated in the market as technology stocks gave back some of their recent gains. Let's head on. Let's shift gears and and see what is happening in the commodities sectors. The U.S. crude oil rose slightly to $70.2 a barrel, while the Brent crude edged lower at $72.73. The Goldman Sachs has also reiterated its bullish stance on the price of gold, and they are forecasting that the price of gold is going to rise to $2,700 per ounce by 2025. And this is literally against the backdrop of what is about to happen, the speculations around the Fed, perhaps reducing the rate. And let's see what the market has up its sleeves. As the Fed's decisions draw closer, traders remains on the edge, preparing for what is really happening, what the potential of the market, what the potential of the market holds up its sleeves.
Absolutely. Now turning to East Africa, Kenya's finance ministry projected a drop in the budget deficit to 3.5% of GDP for the 2025 and 2026 fiscal year, and that's down from 4.3% in the current fiscal year. President William Ruto recently faced significant public pressure, leading to the cancellation of planned tax hikes worth 346 billion shillings, which approximately is $2.7 billion in June. To manage the deficit, the government opted for spending cuts and increased borrowing. The budget deficit is expected to fall further to 3.3% of GDP in the 2026-2027 fiscal year. And of course, with this, we come closer to home as we take a look at trading day on the NGX. Now, looking at trading day on the NGX, we'll start, of course, with the all-share index. The NGX all-share index extended its gains on Tuesday, being today the start of a shortened trading week, adding 229.02 points to close at 97,685.64. Now, let's take a look at the numbers. Now, beginning with the all-share index, which I already told you what that number is. And now going to the all-share index, it's inched up 2 basis points to close 97,685.64. For top gainers, we have FBN Holdings, it's up 10%. Flour Mill again up 10%. Vitafoam up again 9.9%, and Cavite 9.8% up, and Onifla up 9.8%. And if you ask me, I'm just wondering, these are the same stocks, we keep seeing on that top gainer list for a while now. What do you think is responsible for that?
I think Honeywell has been on the list for a long time, but I didn't even get to see the RT Briscoe. RT Briscoe has been consistent for weeks.
Well, not today.
Right now, not today.
Absolutely. Now, let's check out the top losers. We have Itana here, 10% down. Is that profit taken? Maybe, maybe not. And we also see Oando down by 9.9%. Abe Microfinance Bank down 9.9%. Tantalizers down 9.9%. And Mikio is down 9.6%. Now to the top movers. Japan Gold leads again with 72 million. Transcorp, 51 million shares traded today. FBN Holdings, 46 million shares traded today. UBA, 45 million shares. And Oando, 16 million shares were traded today. Now, finally, to currency, before we get started with the pulse of the day. For currency, let's begin with the Naira. It closed 1,639 Naira 50 kobo against the dollar. And then here you also have how other major African currencies performed against the dollar. You have it right there on the board. We have the cedi closing 1570. South African rand closing 17.65, Moroccan dirham 9.75, Egyptian pound 48.41, and Kenyan shilling closed 129 against the US dollar. There you have it. That's the market from right here. But of course, up next, we'll be picking the pulse of the day with Mukhtar Mohammed, the CEO of Ashore Investments Limited. Stay with us, don't go away. And of course, we're glad to have you join us again. Local pharmaceutical investments are on the rise as Nigeria seeks to reduce its reliance on imported drugs and improve access to essential medications. However, significant challenges remain in scaling operations, including regulatory hurdles and financing difficulties. Meanwhile, the halal economy presents a major opportunity for growth, with the government targeting a $1.5 billion boost to GDP by 2027. The sector has the potential to attract investment, significant investment, particularly through Islamic financing tools like Sukuk bonds. But the success will depend on local businesses' ability to compete and innovate. Mukhtar Mohammed, the CEO of Ashore Investments Limited, joins us for this. Thank you so much for joining us today.
Thank you.
Mukhtar Mohammed, thank you very much for coming to Market Pulse. With the growing focus on local pharmaceutical investment, how do you think this push towards domestic production will reduce Nigeria's reliance on imported drugs? And then what impact might these have on the pricing and availability of essential medicines for the average Nigerian?
Well, Frank, for the pricing, I think we may have to wait a little while because cost of doing business in Nigeria is very, very high. And that's why you have the major pharmaceutical companies that were in this country before now left the country because of in terms of cost of production and other issues that have hindered that sector of the Nigerian economy. But the good news is definitely is good. It's good news for Nigerian companies taking those space, making the drug available. So sometimes when you have a challenge, availability is key before you start to thinking of price going down. It's just like when we have GSM come to Nigeria, everybody was just thinking of the availability to be able to make call first before you begin to look at reduction in prices, and that has happened due to competition. So for me, getting to pricing, it in the long term, it will work for us. But in the short term, what we really need is availability. And that's one drive that we should be driving towards.
Right. When we come back from this time out, we'll take you up on availability. We'll take a break now. When we come back, we'll continue. Stay with us. Staying with us, Mukhtar Mohammed, thanks again for joining us today.
Thank you, Perpetua.
Right. Before we went on that timeout, we were talking about availability. What are the factors that are responsible for that factor? Because it's something that's really very important.
Well, number one, costing. Now, when I talk about costing, I'm talking about funding. Availability also depends on how much fund you have to play that sector in terms of the manufacturing sector. Manufacturing of drugs involve a lot of importation of material. Then you also need to know machineries. I mean, then you know the technical will be in terms of manpower. That also is very key. But I think the key for Nigeria to get ahead on that street is the cost of funding. I mean, availability of funds at a low interest rate so that you can be able to grow your business. Because the pharmaceutical type of business is not a business that you do today, then tomorrow you're expecting profit. It has a long-time projection. That is why you saw that most of the companies, people are saying that this company has been in Nigeria for a very long time. Why are they exiting Nigeria after they made massive losses before now? But again, they're thinking of the future that it will get better, it will get better. But when it wasn't looking like that, they had to leave. So that is, for me, the major point is the cost involved. And when it comes to cost, you're looking at funding for expansion, for bringing in new machineries, for getting the right staff, and also able to train them. Because again, training also may involve funding, sending them to train in most of the latest in terms of drug production and that. So those are the major challenges that we face. The knowledge side to have the right man of resources and the manpower to operate that sector. And most importantly, it has been funded.
Let's shift gears a little bit and let's move towards the halal economy. The government has set a bold target to boost GDP by $1.5 billion through this sector by 2027. Which areas within the halal ecosystem do you see as the key drivers of this growth? And how is the government ensuring that the local businesses can actively participate and remain competitive?
I think the government is right. Sometimes you have to give it to them, even if sometimes you think they should do better. Their projection is a very ambitious goal, but it's achievable because of the little result that they've had. You think about the Sukuk fund, how far it has helped most of the businesses growing. So those are part of what the government have been able to do. And so that you are a little bit confident that they will be able to do more. But it's very, very ambitious what they are trying to do. But when you look at again, we are the 8th largest economy in the world. So that means there's a lot of possibilities still there for us to enhance. So definitely, I think that is one area they're living, because if you are the 8th largest balanced economy in the world, that means there's a potentiality of moving further by attracting more of this kind of funding into your economy. I think those are the part that is the government is really thinking about, because of where they are taking advantage of it. In Africa, as it stands now, we are #1. So definitely an 8th in the world. So that's when we are doing something right. And so when it comes to this allied economy, when the funds are come, they'll find their way into Africa. And what key area? I think they should look at local production. And like I said, in terms of local production, infrastructure, in those aspects of this local production, because you could have a good pharmaceutical company somewhere, but in terms of movement of those goods from point A to point B, lack of infrastructure always becomes a challenge.
Mr. Mohammed, thank you for your thoughts. That's quite interesting. CEO Asher Investments Limited. I guess we'll get to talk about this some other time. Thank you so much.
My pleasure.
Right, let's get a glimpse of African markets. And when we return, it will be time for Marketvus.
Let's shift gears a little bit into Marketvus, where we analyze the biggest trends in finance and how they're shaping the market. Today, we're taking a close look at what is happening in the Nigerian crypto landscape. It's really, really growing, and Nigeria has a major role in this index, in this landscape. I have a question for you. If I ask you this question, what is your wallet address? What comes to mind? I'm sure your guess is as good as mine. You're going to go to the back of your pocket and bring out your wallet. But that is not the location of what I'm asking you about. That's not the answer. It's an alphanumeric set of code that facilitates transactions on the blockchain. And you're seeing that Nigeria is literally the second highest Bitcoin adopter globally, right behind El Salvador. And the reason for that is because El Salvador has Bitcoin as the legal tender in their economy. Nigeria has emerged as the most active Bitcoin adopter in Africa, with cryptocurrency playing a central role in both personal finance and business transactions. Data from CoinGecko shows that Nigeria captured a remarkable 658.8% of the African cryptocurrency market share in 2023. To put it in context, meaning that for every 7 transactions that happens in Africa, every 7 cryptocurrency transactions that happen in Africa, 7 of them are from Nigeria. And so the nation's young and tech-savvy population is the major reason why this is happening. And for you to understand what I mean, 43% of the people under the age of 15, that's our population. And this young force is really the driving force of the adoption. It's really the driving force behind the adoption of cryptocurrency. Here are some key takeaways. Nigeria holds the second highest global interest in Bitcoin, trailing only El Salvador. The country dominates Africa's cryptocurrencies market with a substantial market share. Despite tough regulatory measures, cryptocurrency has become a crucial financial tool for fund transfers and savings, especially amongst Nigerians in diaspora. Stable coins like USDT are gaining popularity as businesses and the diaspora community increasingly rely on them for payment, even in some sectors like that of the tourism sector. Here is it. While Bitcoin has performed well in 2023, yielding a 42% return, and if you look at what has happened in the last 3 quarters of this year, you'll see that Bitcoin has literally passed its all-time high, its previous all-time high. The Nigerian cryptocurrency market faces a lot of challenges. Strict regulatory regulations from the government, such as the prohibition on banks transacting with unlicensed virtual providers. All of this has created a lot of challenges. Additionally, we're seeing that prominent exchanges like Binance and OKX have pulled out from the Nigerian market. Despite these setbacks, cryptocurrency remains a significant part of Nigeria's financial landscape. And the Nigerian government also sees the potential for tax revenue from the digital asset. For instance, if you look at KuCoin has introduced a 7.5% VAT on transaction fees, that's on COTs. And the Finance Act of 2022 aims to tax capital gains from digital assets. As the country navigates economic uncertainty, cryptocurrencies like Bitcoin and stablecoins have become vital tools for Nigerians looking at a way to hedge against inflation and against the volatility of the naira. Perpetua, you see what Bitcoin is literally doing? Do you think that there will be a day when we'll go to the streets of Nigeria and literally purchase commodities with Bitcoin?
That's a long one, actually, if you ask me, because we are having policy somersaults. Today, we're hearing that SEC has issued licenses to some exchanges, and then tomorrow we're hearing that some persons are being arrested, are being prosecuted, and all of that. I think we need clarity around, our own regulation around cryptocurrency. Once we have that clarity, and we know what exactly the government wants, and, once we're able to do all of that, maybe we'll get there someday.
The government will definitely want to take a chunk of
Absolutely. Well, that's it for today's Marketvus, and thank you so much, of course, for that insightful time.
Thank you, Perpetua.
But that's our offering today on Marketvus. With thanks for watching. I am Perpetua, Fasanmi-Peter, of course.
I'm Frank Fagbo.
Bye for now, but of course we'll leave you with International Index.